Hello guys, it's me, Emma, and welcome to my channel, Wealth Canopy. Today we're breaking down Canadian marginal tax rates so you can keep more of your hard-earned money. Let's get started. Marginal tax rates apply to an additional dollar of income. As you earn more, the tax rate on your next dollar rises, but only for the portion within that specific bracket. In Canada, you pay both federal and provincial taxes. For example, a $100,000 income in Manitoba totals about $29,260 in tax, including both levels. That leaves you with a take-home salary of roughly $70,739. Remember, this doesn't factor in credits or other deductions, but it's a great baseline for your planning. Understanding your tax bracket is the first step to financial freedom. Subscribe to Wealth Canopy and hit the bell icon to stay tuned for more Canadian money tips.